What's up, everybody? It's Stas here. So in this video, we're going to be talking about how to find winning swing trades in the stock market using ThinkOrSwim by TD Ameritrade. I want to break down exactly what I personally look out for in terms of swing trading. I want to break down catalysts to look out for, different patterns to look out for in order to spot the breakouts, right? And we're going to break down a bunch of different stocks and do some real life examples here. So if you guys find value, hit the like button, make sure to subscribe to the channel, and check out all the free links down below, the Discord chat, the Facebook group, and if you guys want some free stocks, hey, check out those links down below. So right off the bat, guys, what do I look out for when it comes down to swing trading? Generally speaking, there's two things I look out for. One, stocks that are oversold, stocks that have fallen a good chunk from a specific peak, whether it's 10%, 15%, 5%, 20%, right? And I also look at stocks that are on the verge of breaking out. Stocks that we'll go over here in a couple of minutes are showing patterns that are very, very bullish, right? So those, generally speaking, are two things that I look out for. And when you're out there looking for stocks to swing trade, what's causing them to move is called a catalyst, right? And a lot of the time, stocks are moving for specific reasons. So what I look out for, a bunch of different catalysts here we're going to go over. I look out for earnings reports, right? And right now, when I'm filming this video, we're in earnings season. Literally yesterday, we had big tech stocks report earnings. So I'm looking at these different reports. Are they good, right? Did they beat EPS? Did they beat revenue? Or did they miss EPS and miss revenue? Likely, if a stock, if a company were to miss revenue, miss EPS, the stock goes down. I personally don't like to associate with something like that, especially if guidance is off as well, right? So if a company has bad guidance, and by guidance, I mean, okay, what's the next 12 months looking like for that company? The management team puts together reports, talks about guidance a lot of the time. So if that guidance is looking poor, and they did bad with EPS and revenue, that's like a recipe for disaster for a swing trader, at least, for the most part, right? So for me, I like to look at companies that reported earnings, they did well, they beat earnings out of the park, EPS and revenue, and guidance is looking very good. It's looking strong over the next quarter, the next couple of quarters, right? And a lot of the time you notice a company does well with EPS, revenue, the guidance also looks good, and somehow the stock goes down. That is a recipe, in my opinion, for the most part, of success, right? That is what I'd like to look for in terms of an initial entry when you're looking at different earnings report plays, right? So some other catalysts to look out for that I personally look out for are share offerings, share buybacks. Are they doing buybacks, meaning are they buying back their own stock? A lot of the time that shows strength in the particular business itself, and that could push the stock up. But on the flip side, share offerings, a lot of the time if a business is putting more shares out there in the market, it might push down the stock in the short term, but it could also snap right back after a couple of weeks / months. So I'm looking out for buybacks. I'm looking out for share offerings, mergers. A lot of the time, a big company likes to buy smaller companies and just add them to the business, right? We saw this when Facebook bought Instagram, and a lot of, Amazon buying Whole Foods. You see this a lot across the business world, right? So I look out for mergers that could pop up a stock's price, or if a stock is looking to go private, a lot of the time that could push up the stock in the short term. And another huge thing to keep an eye out on, and you should have a touch on what's going on, is the overall market conditions at that time. What's the market sentiment looking like at the time period you're currently trading, right? For example, right now when I'm filming this video, I'm a swing trader, I'm in the markets. It's a pretty tough time period right now. We have CV spiking up. The presidential election here is about to occur. The economy is still struggling. So there's a lot of volatility in the market, and you guys can see it right here on SPY and S&P 500 ETF. Over the past couple of months, it's been nonstop volatility, up, down, up, down. So you guys have to have a pulse on the overall market conditions at that time. Is it a volatile time period? Is it a more smooth sailing? And another way to kind of determine that is to look at the VIX. The VIX is the volatility index, also known as the fear index. And for me as a swing trader, I like a lower VIX. I like it when the markets are less volatile. It just makes it easier for me, through my experience at least, right? And when the volatility kicks up, it's a bit harder to spot swing trades, but don't worry, guys. We're going to talk about different patterns right now to look out for. But again, guys, just keep an eye on the VIX. It'll show you the volatility in the market and kind of how fearful people are out there. So now let's break down some real-time action and go over a bunch of different stocks and take a look at some patterns here that I look out for when I want to enter a swing trade, right? So I look out for ascending triangles. That's pattern number one. And the stock that best fits this, and I've actually been talking about this on my channel for the past couple of weeks, the stock that best fits this right now is Shopify, right? You guys can see it, and I'll pop a screenshot here to show you all the pattern. This is what it is, an ascending triangle, right? There's a big resistance, a big wall at about 1050 to about 1100, 1150, right? That's the top, but we're actually ascending into that resistance, right? We're making higher highs, or not necessarily higher highs, but we're making higher lows, right? We hit a low at 305, higher low at 360, another higher low at 730, another higher low at 870, and now that we're selling off into the low 900s, this could be where the next higher low is. So let's say, for example, we end up holding this, right? The idea of an ascending triangle is we end up holding, we squeeze higher into the resistance, and then ultimately we end up blowing right through that. So if this were to play out perfectly, Shopify would have to hold 900, 920, 930, that general area, rally up to about 1050, break that, break 1100, 1150 as well, and then make its way up to 1200, right? And that would be a perfect ascending triangle breakout. But going back to what I said before with market conditions, right now the market's selling off aggressively, right? There's a lot of volatility, a lot of turmoil, so that's bringing down a lot of these large cap stocks. So once the market settles down a bit, right, and they also reported earnings yesterday, which the market sold off too. So overall, guys, with Shopify, we're oversold, right? We're beaten down. We're looking bullish if this ends up holding. And another thing that you guys should be doing in terms of swing trading is using multiple time frames. I like looking at the 184-hour chart to get an overall perspective here, but I also like looking deeper. I like looking at the 20-day 1-hour chart and the 5-day 5-minute to show me what's kind of going on in the shorter time period. Because, very big reason here why I do this, because before I enter into a swing trade, right, I like to see consolidation and a breakout of the moving averages in the smaller time frames to get confirmation, right? Because the last thing I want to do is look at an oversold stock and get in a falling knife, right? That's the last thing I want to do. And at this point, Shopify, yeah, I mean, it's in an ascending triangle, it's oversold, it's still a falling knife. We haven't really found a bottom yet, so I'm going to let it bottom out, break out of those moving averages on the 20-day chart and the 5-day 5-minute chart, and I'd like to enter anywhere, let's say from 950 to about 960, right? That's what I'd be aiming for here with Shopify. And another one I want to show you guys here is on NIO, ticker symbol NIO, and this is more in the category of the verge of breaking out, right? Remember in the beginning I said I look for generally two different things, stocks that are oversold and stocks that are on the verge of breaking out. Well, this one was a bit oversold, but it was more on the verge of breaking out. And let me explain, right? You guys can see NIO, and overall on the 4-hour chart, let me pull it back a bit, NIO overall has been doing a very similar pattern for the past couple of months. It's been seeing a massive run up, a lot of volume, a lot of price action to the upside, right? Here it went from 7 to 15 and then it sold off, right? It's been seeing these legs up followed by selling. And you guys can see here, I mean, back in July, this was a perfect ascending triangle pattern. I mean, whoa, let's take a look. This is real life examples. Remember with Shopify, right? We didn't break out of the ascending triangle quite yet. You guys can see going back to shop, right? We're still at the support of the ascending triangle, but going back to Neo in that specific time period back in July, we held that support on the ascending triangle, and then we broke out of the big wall at 1580. So this is a real life example, right, of a very bullish ascending triangle. We broke 1580, saw another leg up to about $21, pulled back down into this wedge right here, broke out of that again, so another leg up, consolidated a bit, another leg up, and then we saw the channel here, which I actually called out at about $27, $27.50 on my Twitter. I'll post a screenshot here, and make sure to also follow me there at StockSurfS and on Instagram at StockSurfS. So we called that breakout, and it ended up rallying up for another leg up now to about $32. So overall, that's what I like to look out for. I like to look out for channels, downwards channels, and a breakout of the resistance, right? That's one thing I look out for. Channels forming and then breaking out, bullish breakouts from there. Also, again, ascending triangles and wedges that break out, right? These are signs of potential breakouts. And once you know these patterns and you write them down and you're familiar with them, you'll be able to spot them like I did on Twitter, right? And end up playing them and catching them. Although, honestly, I didn't even trade that call out that I made on Twitter, which sucks, but I called it out anyway. It's funny how that works sometimes. But overall, guys, that's what I look out for. I like to look out for bullish channel breaks like this and ascending triangles. And I also look out for, and this is more on some smaller time frames, and you could also look at this from larger time frames as well. But I like to look out for double bottoms, right? That signifies a reversal in the short term. And by double bottoms, I mean, let's take a look if we can find one. Something like this, right? This is a double bottom. You guys can see here on Upwork, it hit about $5.20, 30 cents. It ended up rallying up to about $7.30, got rejected by the main moving average here, but you guys can see it bottomed again right around that same period where it bottomed before. So we hit it once, we double bottomed, and then we broke out, right? A lot of the time you see double bottoms followed by a nice little pop afterwards, which it doesn't always happen, but a lot of the time that's how it does end up playing out. So I look for double bottoms, and another big one here is the inverse head and shoulder, or also known as the reverse head and shoulder. And I have a perfect example for this on the SPY, also known as SPY, and S&P 500 ETF. This is a textbook reverse head and shoulder from back in the beginning of September all the way to the middle of October. Take a look. You guys remember in September we sold off aggressively, like historically, right? September is a very weak month, so we sold off from 350 down to about 320. And during this sell-off, we made the beginning of the inverse head and shoulder. We had the left shoulder right here, and let me pull out one of these drawings to make it easier for you guys to see. So we had the left shoulder right here, the head of the pattern right here, and then the right shoulder is what is it? It's right here, right? You guys can see the right shoulder was formed right there, and then we ultimately broke out and completed the inverse head and shoulder at about 355-ish points here on SPY. So how could you trade this? How would you be able to trade this? Well, if you see the initial sell-off, you spot the left shoulder and the potential formation of the head, then you start to see a potential right shoulder forming with higher highs and higher lows like it did right here, and then we ultimately break out of the low from the previous shoulder, or the high rather, from the previous shoulder, which in this case was around 340, right? So if I was trading this real time, this is what I would be looking for, right? I'd be looking for higher highs, higher lows, and ultimately a break out of the moving averages here on the 4-hour chart, and a pop to go for the completion of the right shoulder, right? And again, a pop would be anything above 340 here on SPY, which ultimately ended up happening, and we saw that completion there. And another one here that could be forming, but it's slowly failing on me here, is AMD, Advanced Micro Devices, another inverse head and shoulder. We have the left shoulder here, the head, and then the right shoulder was trying to form here. That's if it were to hold 77 bucks, but it failed, right? Which 77 held in the left shoulder a couple weeks ago, actually almost 2 months ago, more than 2 months ago at this point. So we failed holding that left shoulder support. Now we're filling the gap down to about $73, $74. So AMD's inverse head and shoulder is slowly collapsing. So this one might not pan out. So you have to look at these different patterns here, guys, and spot them and try and figure out, okay, are they panning out? Or are they not panning out? Kind of like with AMD, it's slowly starting to fail. And another big thing to look out for, guys, is bullish divergence. And I personally use, obviously, the chart itself, RSI, and volume in order to spot this. And in layman's terms, guys, what a bullish divergence is. For example, right, and I personally couldn't find one here in my brief little couple of minutes looking, but we're going to use MA as an example. This is a pretty decent example right here. What I personally look for is, okay, a stock that's selling off. We talked about that earlier, oversold stock. And an RSI that is actually pushing up. For example, and I'll put a screenshot up here. For example, let's say the relative strength index, also known as the RSI, is making higher highs and higher lows as the stock itself is still making lower highs and lower lows. That is what's considered a bullish divergence, right? There's strength building up in the move, but the stock's still going down. And if you see volume also going up with the strength building up and the stock's still going down, that could signal strength in the move coming up. So in this case, I mean, you guys saw the screenshot, but in this case on my screen here with MA, it's not really showing a bullish divergence fully quite yet. I mean, RSI is still making lower lows and lower highs, and so is the stock, but volume's actually picking up. So we're seeing a surge in volume, so that is a good sign as the stock's going down, but I want to see the RSI start to reverse up as well. And you can look at bullish divergence on all time frames, right? The 4-hour chart, the 5-day, 5-minute chart, the 20-day, 1-hour chart. That's what I personally do. So overall, guys, that is really it for the video. We went over a bunch in this video, so let's quickly do a little 30-second recap. So overall, I look for stocks that are either oversold or on the verge of breaking out, or a little bit of both, right? And I like to trade kind of overreactions as well in terms of earnings reports, whether or not they beat or miss. I look at guidance, good guidance, poor guidance. I also look at whether or not a stock or a company is doing share offerings, buybacks, mergers, and it's very important to also look at what the overall market conditions are at that point in time when you're trading. And another big thing is using multiple time frames, right? The 4-hour chart, the 5-day, 5-minute, the 20-day, 1 hour to get different perspectives on that particular stock and different patterns, right? Ascending triangle, the bullish channel breaks, double bottoms, inverse head and shoulder, bullish divergence, and there's honestly so much more on top of that, guys. So if you all enjoyed the video, hit the like button for me, make sure to subscribe to the channel, and check out all the free links down below, the Discord chat, the Facebook group, and if you guys want a couple of free stocks, check the links down below as well. And if you all want me to make a part 2 to this video, let me know in the comments, please. I'd be glad to make a part 2 and build on top of this video to help you guys out. So I'll catch you all in the next video. Thanks for watching as always. Peace out.